Good morning, good afternoon, and good evening, friends. We are in sale of goods on accrual or return basis, right? Let's do a small recap what actually it is before we get into the illustration. So, what is sale of goods on return basis, on accrual or return basis? We took an example of like online purchases, right? Or an wholesaler sending it to the retailer, or the manufacturer sending it to the retailer, etc., where the goods are sent for approval, and then if the if the goods can be returned for sales promotion, like in a normal sale, a person is selling the goods and then taking money and then delivering the goods, right? That's a normal sale. Whereas when the owner or the promoter wants to promote the business, then they can go in for a more of a marketing related activity. Like they can send the goods to the retailer and say that, okay, once you sell these goods, you can pay the money to me. So what are the prerequisites for this? Like the possession moved from seller to buyer, whereas the ownership still lies with the seller. Money could have got paid or need not got paid. Even if it is paid, the buyer has the right to reclaim the money. Right, these are also some of the basic requirements that we saw, and we also saw the couple of journal entries. Now let's get into illustration. Um, Illustration 1. G sends goods to his customers on sale or return basis. The following transactions took place during 2016. September 15. September 15. Sent goods to customer on sale or return basis at a cost plus 33 1 by 3 percentage 1 lakh. So normal entry is customer account debit, customer account debit, customer account. Okay, let's just customer account debit 1 lakh, 1 lakh, and to sales account credit 1 lakh, sales account credit 1 lakh. This is the goods sent on sale or return basis. Like let's put the narration: goods sent on sale on approval or return basis. Right? Next entry is goods returned by customer. Goods returned by customer. What will be the entry for goods returned by customer? That is the reversal of sale entry. Sales account, goods returned by customer is 40,000. This also should be entered at invoice price to customer account. This should be entered at invoice price again. And the date of this is 20th October. 20th October. Next set of entry is received letters of approval from customers. Received letters of approval from customer is as good as like sale. The customer has accepted the goods, right? So there is no need for to process an entry because it is already covered as part of the sales entry. 40,000 includes the goods approved by the customer on sale or return, right? So next entry, this is goods returned by customer. Goods returned, and customer has accepted 40,000 worth of goods. And goods with customer awaiting approval 20,000. Okay. This 20,000 is assumed like the return time is still not completed. So the goods is retained by the customer and it is still not sold. Right? It's still awaiting the approval of the customer. So we have to take this goods back into stock by reversing the sale entry. Right? 31st December. Again, let's reverse the sale entry first. Let's reverse the sale entry first for 20,000 rupees. 20,000 rupees, and then let's process the last entry on 31st December, which will inventory account debit, inventory with customers on sale, on approval or return. So this is the account which has to be debited and credit to be given to the trading account. This should be at cost price. What is the cost price? It is put on here in the question, like customer is sending the sale sent goods to customer on sale or return at a cost plus 33 1/3 percentage. So it means that on cost price it is on selling price it is 1/4. So which is 15,000. 15,000. This is taken back at cost price to inventory. Cost price to inventory. Hope this is clear, right? So let's get into illustration 2 now. This is clear, right? Inventory with the customers on sale and approved return. We have to take it as cost price. How it is cost price? It is normal formula. So 1/3 cost plus 1/3 means at selling price it will be 1/4, right? So 20,000 into 1/4 is equal to 5,000 is the profit that has to be reduced and 15,000 is the cost that has to be taken. Let me explain this. Sale price 20,000. Cost price, it says that plus 33.33 percentage markup. Markup is the selling price. Cost price 33%, 33.33% markup is the selling price. So we have seen in the higher secondary classes, if it is 1/3 on cost, it's 1/4 on sales, right? So that is equal to 20,000 into divided by 4. 5,000 will be the profit that is inbuilt, and the cost that should be taken is 15,000. If we see this 15,000 into 1/3, right, into 33.33 percentage, 4,900, just 5,000 rupees. So that is how it should be calculated. Now let's get into illustration. So okay, and coming back to this 5,000 has been reduced, and then the inventory has been taken at 15,000 rupees, which is the cost price. One important point to note here is when, if at all, the customer is returning the goods. If at all the customer is returning the goods, then we should not process any journal entry for that because it is already taken into inventory here. It is already taken into inventory here. So we should not process any goods, any entry to this. However, if the customer is selling these goods, then obviously the differential price between cost price and selling price, a differential sale entry has to be processed by debiting customer account and crediting sales account. Okay? The customer is selling the goods because we have already reversed the sale, so the sale entry has to be processed. Okay, and okay, now let me put that entry also for easy reference. If the customer has returned the goods subsequently in the new year, then no journal entry has to be processed as the goods are already taken into stock. If the customer sells the goods or approves the goods, then a sale entry has to be processed for the differential amount. Right? Now let's get into illustration 2. Illustration 2. S Limited sends out its goods to dealers on sale or return basis. All such transactions are, however, treated as actual sales and are passed through the day book. Just before the end of the accounting year, on 31/3/2016, 200 such goods have been sent to the dealer at rupees 250 each. Cost is 200 each on sale or return basis and debited to his account. Of these goods, on 31/3/2016, 50 were returned and 70 were sold, while the other goods due date of return has not yet expired. And similar entry, similar question to what we saw in the first illustration. S Limited sends out goods to a dealer. Okay, what we're talking about is 200 goods sent, right? 200 goods are sent on sale. So, customer account debit, 200 goods at 250 rupees is equal to 200 into 250, 50,000 rupees. Sales account credit 50,000. Right? This is goods sent on sale or return basis. Now, out of which customer has returned 50. Right? Customer returns 50 means sales account debit. Sales account debit is equal to 50 into 250. And customer account. Customer account. This is for sales return. Or here in this case, goods not approved. Goods not approved. So sales return 12,500. Now 70 has been sold. 70 is already sold. So you don't have to process an entry because sales is already moved to the customer. Customer has accepted them. What is the balance quantity? Balance quantity is equal to 250, which is 200. 200 is equal to 200 is a goods sent minus 50 returned minus 70 sold. Balance is 80 numbers. So 80 numbers, we have to process the sales return entry now. Sales account debit to customer account. This is sales return entry for balance stock. For balance stock, which is 80 into 250 is 20,000 rupees and 20,000 rupees. The sales return entry has to be processed. Then the next entry that has to be processed is taking it to the inventory account. Balance 80 has to be taken into inventory account. Inventory account debit to trading account. Inventory account. So we are inventorizing this 80 goods. 80 goods inventory is cost price. So 80 into 200, that is 16,000 rupees, has to be taken to inventory account. Hope this is clear, right? Just in case you have any doubts or clarifications, please reach out to me at babupriya@redmail.com. We will continue with the other illustrations in the next class. So if you have any queries or doubts or clarifications, please reach out to me at babupriya@redmail.com, and I will be very happy to explain your queries. Thank you, friends, and have a great day.